differently when it comes to managing risks and repetition. Let me start by probably getting Mark Reed first on to give his opening remarks. Mark, over to you.
Thanks, Shweta. You broke up a little bit in that. So can you just clarify the question? Sorry.
So in your opening remark, if you could talk about the one lesson that you may have learned during the crisis.
I think that we've gone back really to look at the purpose of WPP. We set out a new purpose to use the power of creativity to build a better future for our people, our clients, and our communities. And we've really used that to guide the actions that we've taken. I think that you have to focus on all of your stakeholders. It's a challenging time, and businesses at times like this need to make tough decisions. But I think if you go back to your purpose and look at what you're trying to do, it guides you in making decisions. There's clearly trade-offs that you need to make. And I think in this pandemic, many of the trade-offs have been made perhaps in different ways than we would have made in different crises. I think we tried harder to protect jobs than perhaps we would have done in the past, and really looked at the balance of stakeholders. So I think purpose, and we could probably talk about it a lot during this panel, has really risen up the corporate agenda, and certainly that's true at WPP.
Sure, I hope I'm coming across clearly. And thanks for Mark. To follow on Mark's point, we'd actually set our purpose just before the crisis struck and had put nice new values up on the wall. We're a business that helps other businesses invest and operate safely around the world, and dealing with the complexity of legislation rules to keep them compliant on basic admin like payroll, legal filings, accounting, tax, etc. But for me, the crisis, I'm long enough to remember the financial crisis 2009-10, and for me it was a real chance to show that those nice words on the wall and on the screensavers about what we care for, that we really mean it. And the two for me that stood out were clients and colleagues. So with colleagues, getting them to work safely, remotely, and still maintain client service was a real focus for us. We have 9 offices in China, so we were early on to COVID-19, but we managed to get that transition and keep people safe, and saw a really big pickup in colleague engagement as a result, which I was really, really pleased with. And on the client side, my view is this is a chance. I think all 3 speakers are sort of service industry, business-to-business firms. So we really wanted to show our clients that we care, that we were there to help them in what could be a very painful crisis. The idea that we pushed was to help them navigate all the government support schemes. When we started, there were 20. We listed them on our website with links, descriptions, the offer of help to apply if they needed it. As of today, we have something like 1,600 schemes listed for all our clients. And it was just a small token to show that we really cared. So for me, a crisis is difficult, but it's also a chance to stand out from the crowd if you really do live your values.
Absolutely. Shobana, if I could get your perspective there, you're clearly in an industry that is a very tough one and that has been in the spot during the pandemic. What are some of the key takeaways that you've had and you'd like to highlight in your own remarks?
Everybody kind of, at the end of a Zoom day or at the end of these webinars, we tend to get tired. So let me start with a bit of a story. About 7 years ago, I was having dinner with the chairman of Munich Re, and who better than him to ask what he thought were the major risks the world faced. And as he went down, the first thing he said that is discussed in boardrooms is, of course, things like climate change, and then they talk about technology and what the changes are and things that we don't know, and information, the whole list of whatever we're struggling with. But very interestingly, he said that they expected, 7 years ago, they expected a pandemic to hit the world, and that would come from the East. So now tell me, when people knew that there was a possibility of all this, and how prepared was this world to be able to handle it. And when it struck us, and this is, the chairman of the largest reinsurance group in the world, and then in that, I was just thinking that, how prepared were we? So being frontline healthcare workers, I think one of the things is that we locked down early, economic disaster for sure, but it gave us a chance to learn. We actually could learn how people were doing things around the world. So we were very quick off the gun to be able to start marshalling forces. And at that time, we all sat back in our boardroom and said, this is the time that people are not going to judge us, the investors, the analysts, they're not going to judge us by how good our balance sheet looks, but they'll judge us by how many lives and what we can do to help this country through the pandemic. And that's the choice we made, that very quickly we said, this is a time, when we'll put ourselves fully out there. So even though we had 10,000 empty beds, we started gearing up, and we said, we created 3,000 COVID beds, another 3,000 step down in hotels. And then we started, making sure that the hospitals, because after the lockdown, people were coming in sicker. So, we started looking at all this, saying today we're on our 23rd COVID protocol, that it had to keep evolving as this, this disease kept, we all kept learning. I look at the early days and I said, oh my God, did we really do such things? And now as we move into it, so this is the fastest learning curve in the world, which has never happened before. So I think this is something that has made companies highly agile. So one is that they've clearly underlined the importance of healthcare and healthcare systems. The second thing is that many collaborations have taken place because everyone knows that they just can't do this alone. So that's a second takeaway. The third is agility to manage risk. And I think that's what we were able to do by, suddenly you have 7,000 doctors sitting at home. And just because we had our digital platform, in 45 days, 3,000 of them were online. And I think that these are the things to be able to use technology and to be able to really move the envelope and communicate. And I'll leave you with the last point, that for us, I think that at this time, it's also about trust in the people, that we have to be frank and tell them. And so we lost people. Nobody has been unscathed by this, but I think that what's happening now is, I feel that we're starting to win a lot more. We're bringing the mortality down, and I think that to us is the biggest hope. And of course, the vaccine, that we proactively said this is going to be very important, and we said across the group, what can we do? So I think that this is the time that everyone, can really play a part in being better citizens. These are the times that you have to step up.
Absolutely, Shobana. This has been very, very heartwarming to see how healthcare institutions, frontline workers have stepped up during this time. No words really to talk about just the kind of contribution we've seen from healthcare institutions like yours, as well as healthcare workers. Let me go across to Brad Staples now. And Brad is someone who's been managing risk and reputation for years for your clients. How different have the last 7 months been for you?
Thanks so much. Well, I think from our own point of view, from an APCO point of view, we've lent really heavily on our own values and the culture that we built within the organization. We had notions of boldness and curiosity and empathy and inclusivity that kind of defined the values of the firm. And I think they were words that just sat out there. I think Mark kind of said the same thing before. We've really had to draw on those notions to give a centrality and a direction to the business. And we seem to have done well in that context. So I'm pleased about that. From a client's point of view, I draw a big distinction between those businesses that are fighting for their very survival. For those that are in the transport, tourism sectors, this has been a very asymmetrical economic impact And those that are fighting for their survival are in full crisis mode. What we've seen with those that can navigate this better is that, because they're in sectors less affected, is that they're willing to invest more and to prepare more for unanticipated events and potential crises going forward. So there's a new mindset of political risk management and crisis management. I think the other thing, that there is an orientation towards the internal audience, to the welfare of staff, employees, the well-being of customers, and those in the value chain. That there's a lot more focus, though, on the internal piece, and it's probably part of a shift that we were seeing before to more responsible capitalism and embracing ESG and a real focus on sustainable growth. And I think because of the appetite for a green economic recovery hasn't gone away, the businesses that are going to do well out of this are going to be those that have a vision for a green recovery and are showing a full commitment to it. I think the last thing I'd say is the CEOs we're working with, those that have the vision and the wherewithal and the capability to talk about macroeconomic and geopolitical issues, shortening of supply chains, the decoupling of the big trading blocks, those that can get out there and can embrace those issues and talk about them, and do that with a certain amount of empathy and understanding as well, and can connect well with their people on a human level, they're the ones that are doing well. But that means leaders need to be bold and forthright in the way they engage.
Very interesting points we've heard in opening remarks from all our panelists. And I think some of the terms that have been spoken about is something that we'd like to take forward over the course of the discussion. Trust came up a lot. We've talked about sustainability, we've talked about external perceptions over revenues, something that Shobana had also mentioned. And of course, talking about responsible capitalism, as Brad was just telling us. Interesting concepts here. But one question that I'd like to pose to the panelists is, how different will this new normal be? How different will the post-COVID world be in the way people have viewed crisis management as well as repetition management? It has been top of center for many, many corporates, always realizing that, yes, in today's times of social media, in today's times of hyper connectivity, managing risks and repetition is something that all corporates put a lot of value upon. But what has changed in the last? People sit up and take notice and say, you know what, this is something we just cannot ignore anymore. This is something that we need to get better at. So maybe Mark Reed, if you come in on this point and say, is there something that companies need to ponder upon now and say that we need to course correct?
I think that we've seen in some ways the greatest sort of period of innovation here. We've seen a decade's innovation take place in 6 months. But when we come out the other side of COVID, and despite the difficulties, there's no doubt that we will come out the other side. I think the world will be fundamentally changed, not just the shift online, but the future of the office, the future of the high street, the future of education. Everything has really been transformed over the last 6 months. And whether we like the phrase the new normal or not, by the time we get back to the normal, we'll have forgotten what it was when we came into this. So I think that the growth of social media and the increasing ability for consumers to really communicate amongst each others makes reputation even more important. We have to think, I think, about reputation as an investment that companies make, and there's 2 times when you should make an investment like that. One was 10 years ago, and the other is right now or today. It's not too late. So we say to our clients that what's important is how you behave, and so you really have to think really carefully about what you do. You can't fake this. You can't invent it. It can't be something that sits with your corporate affairs department and your public relations department. It has to be really something that comes from the leadership, the top of the corporation. I think someone mentioned empathy. I think that we are living in a world where empathy is ever more important. Understanding how your actions impact other people, and really taking that into account when you make decisions. And I think companies that strike the right balance will be those that come out the right way. We look a lot to the west coast of America and the technology companies that I think have in many ways really sort of led the way in living with purpose, despite at the same time many of the products they sell and many of the platforms they operate being very disruptive to society, and perhaps that's why they put such an emphasis on these elements of what they do. So coming back to where we started, reputation is critical, and I think we have to view it as an investment and an asset that we need to continue to invest in.
Repetition is an investment, I think, even more important in today's times. Brad Staples, I'd like to come back to a point that you had clearly made about winners and losers in this crisis, and clearly there have been many. Some you can categorize, as you said, by the mere sector they operate in. Obviously we know hospitality's been hit, travel's been hit, and those are sectors that whatever they may do will be the ones who would be in some ways the casualties of the pandemic. Then there are the obvious winners, whether we look at tech businesses, whether we look at ed tech or health tech, those are clearly sectors that have been winners. But you also talked about another distinction. And the other distinction that you mentioned, which is interesting, is that those who always believed in putting trust and repetition management up a center, those who always valued empathy and put in values like caring for stakeholders beyond just shareholders, are the ones that have emerged stronger from this crisis. Could you share with us a few examples or a few anecdotes or any thoughts around why you believe this is a very firm trend that has come to be?
Yeah, I think it's a firm trend because we've been engaged by global corporations in the course of the last few months to do more in helping them map the kind of geopolitical economic landscape around the world and the issues that might emerge that could create new challenges for them. And that's for some of the world's biggest travel and tourism companies, consumer goods companies, food sector, tech. So it's across the full spectrum. We're seeing an awakening of interest in being better prepared and anticipating the unforeseen. Part of that is because first mover status and being out ahead of the issues can make a big impact. The availability of stimulus funds, the ability to capitalize on those opportunities has driven some, as well as just being able to demonstrate that sincerity and connectivity, as Mark was talking about, the empathy point. Somebody like Arne Sorensen at Marriott very early on got out using video to communicate to their global workforce about the layoffs that sadly they had to make across their business. But he did it with a degree of honesty and sincerity, which kind of sets a benchmark when you're in an uncertain time like this. We're all using Zoom, Microsoft Teams, WebEx, whatever it is, a lot more. It's hard to hide, strangely enough, in this forum. And there's this kind of human quality that leaders have to demonstrate. And if they can't do that and make that connection to people in a way that's sincere, it becomes very obvious very quickly.
Interesting you mentioned that point, and especially interesting you've given us an example where you think it worked and it worked well. Let me take that forward with Mark Weil. We had Brad interestingly saying you can't fake this anymore, and you're on WebEx, you're out there, you're on Zoom, you're on Microsoft Teams, never mind the platform. People can see what's going on. At the same time, I think there is heightened expectation for corporates to now be a part of social issues. For instance, there is increased employee activism that we're seeing across the globe, whether it's the Black Lives Movement or it's other social issues. There is an increased awareness as well as expectation that corporate leaders would step in and not just manage perceptions and not just take care of employees and other stakeholders, but they would also have views on social issues and take a stand there. Do you think that's a healthy trend, or do you think that's a trend that will at some level come back to backfire corporate leaders who've decided to tread on that path?
I think it's inevitable. And I'll say, thinking about the crisis again, I mean, of course, it's been a personal tragedy and stress for a lot of people around the world. And it's also been an economic stress, and it's hit GDP. But it's accelerated some strange things, right? It's obviously accelerated technology. Here we all are on a WebEx call. I did one with all our staff around the world last week, so 90 countries. We'd never have even done that before, even though it's perfectly possible. And so, Zoom is now, I believe its market cap is higher than the world's top 7 airlines combined, for example. One of the statistics that just reminds you how the world's changing. And then similarly, you've got things like Tesla's market cap higher than the 2 world's biggest car manufacturers, Toyota, VW combined. There's all sorts of things that feel to me the crisis has accelerated as part of just a sense of inflection in a range of ways. And on the broad arena of ESG and around what we're doing on social governance issues, we just benchmarked ourselves. We're good at some things. We've got some work to do on others. But I can tell you there's a lot of pressure starts with the consumer base, in our case, our investor base as well. And there's a real expectation that we will do and say things and act in ways that reflect that agenda. And I guess we all have to make sure, I suspect, being caught trying to greenwash or whitewash or otherwise the reputation of the firm without actually being serious strikes me as unwise. So certainly in our case, we're trying to figure out what are the ways we can make a modest difference in our way and act on it. And actually the pressure from us comes mainly from our employees. Our employees expect it. They want to work for a firm they feel proud of, not just in its kind of core capability, but also it's making some difference to the world. In our case, making it easier to do business, helping. In places like India, we've been very involved with Niti Aayog in trying to promote reform, to encourage simplification, ease of doing business in India. There's that really correlates with GDP per head. It really matters to a lot of people. And if we can be an activist in helping encourage governments to make it easier to do business, that's one way we're committed to trying to make a difference.
Great, interesting. Shobana, my question to you really is around something that you yourself had raised, which is just the kind of remarkable work that we've seen healthcare institutions do during this crisis. It's not always path indefinitely. You mentioned that you would not put revenues as your big priority at this point in time. Saving lives would be the topmost priority. At the same time, we just assume that businesses that are in the business of social good also in some ways, whether it's healthcare or education, can just go on endlessly like that. For instance, we hear a lot about parents saying we don't believe we want to pay school fee because at the end of the day our children are not going to school. Or there are questions raised around just how much hospitals are charging for COVID treatment. How hard do you think it is for sectors like healthcare and education to at this point show empathy, do the right thing, and at the same time keep their businesses afloat?
Yeah, I think Shweta, I probably went straight into that wall, right? We're always asked because people really think that healthcare is a right and that you should be able to get free healthcare. It is a right, and if the government they've done a great job. We have the biggest health insurance for the world, anywhere in the world, 500 million Indians. Nobody's attempted it at that. But please tell me that, and that is at one level, just like the NHS. But this is a world of free choice. I mean, you know how it is that people will go to what they can afford and how they'll do it. And healthcare is expensive. And I still remember vividly my dad on NDTV, and when they asked him this, and he said, please look at balance sheets at the end of the day. See what the net profit is. Don't look at how much you're actually charging a patient, but it's not significant with that, at the amount of risk that you put yourself, that a doctor puts themselves, every single person. And in COVID, the risk is doubled because we're actually exposed all the time with this, and people don't value, so I think that it's important to value the healthcare workers' lives also, the risks that they're putting out there. And at the end of the day, there's no price to that. But please understand that it's not being charged at some exorbitant rate. So I hope to take away something of the pandemic, that people understand that that healthcare is out there, but it cannot be given free. That's one. And I think people have started to realize it. The second is you won't believe the number of hospitals that have closed down and clinics. They're only about less than 55% of doctors that have opened their office. Small clinics have closed. But what's happened is because of the pandemic, so many people are going to need vaccines. Many more who have had COVID have post-COVID so many complications. So I think this is on top of our already sick population. So there's going to be a lot of pressure. And I think that at that time, you have to really look at this and say, are we creating a conducive atmosphere for us to be able to, so that's it. You need to create a conducive business atmosphere that is fair. And if you ask me, I think that this pandemic has really brought out a huge amount of inequalities with, in terms of the businesses that have done so well and in terms of the haves and the have-nots. But healthcare is not in that league. We've actually been there with the have-nots really struggling along and just trying to make, to keep everything moving. So it's been really a tough challenge for us. And I do think we don't see light at the end of the tunnel.
Very tough times. These are tough times for all sectors, and healthcare has been obviously at the receiving end of some of what we've heard, Shobana. Sectors that are just expected to do good. Like I said, sectors like healthcare, sectors like education, where there is an expectation underlying that these sectors will always do good. But at the same time, I think we're now living in a world which is of new stakeholder capitalism, responsible capitalism. That's a term that I think Brad had used, where it's not just these sectors. Everybody is expected to do good along with doing well. And even when you're not doing well, you're expected to do good. Brad, if you could focus a little more about this term that you used about responsible capitalism, and you, of course, brought in the sustainable capitalism term as well. But if you could, in general, focus around the fact that we now live in these times where just doing good is not enough. If you are not just doing well, is not enough. If you are not focused on doing good and giving back to society, how important has that aspect become for corporates around the world?
Look, I think smart leaders have always understood that they needed to engage in a sincere way in the workplace, in the community, and in the environment. This pandemic is going to have a long economic tail. It's going to take a long time for us to come out of this. And what's ahead in 21 may be more challenging economically even than we've seen this year. Leaders that demonstrate a sincerity and a commitment to the welfare of their people, their health and well-being, a connectivity to the communities in which they operate, and an understanding of how to build sustainable green growth for the future are going to find a receptive audience. They'll find that in a social media context. They'll find it in their engagement with government leaders and others. I think the point is this, that those in public service have been found wanting in many parts of the world. Leaders have not been able to respond quickly enough or have not been clear enough in the way they've been dealing with the pandemic. The emphasis is now on business to step in health, in education, in creating a new economic backbone for for everybody. And I think leaders are going to have to grab what Mark Benioff talked about in terms of responsible capitalism and embrace it in an accelerated way. It's not a nice to have anymore, it's core to success. And the valuation of the business and the security of a role as a CEO is going to depend on being able to do this with consistency and a full commitment. We've seen a lot of CEOs lose their jobs in the last 18 months, even before the pandemic. The tolerance for an inability to communicate on these issues is very, very small in boardrooms across the globe.
I'm glad you brought up Mark Benioff. I've had working with Salesforce before I joined Sequoia Capital, and absolutely remarkable to see how Mark Benioff has been like one of those tall always put trust as the number one value. And I think during the pandemic, it was absolutely remarkable to see Salesforce, really continue on its path of giving back to all stakeholders and not just shareholders. So those are clear examples of how, embracing those values all through help you during these crisis times, and why it's important to make those right investments. I want to shift the focus slightly to talk about one thing that has become in some ways a necessary evil, and at the same time something that we all need to learn to navigate, and which is social media. That brings with it many, many challenges, including fake news, slander campaigns, smear campaigns, trolling, and whatnot. What's the advice that you're giving to your clients, or some of the lessons that you may have learned in terms of handling what is going on right now in this world, where a lot of your reputation may not be in your hands, and it's out there for people to take digs at, to take pot shots at, or for them to really drive a campaign or an agenda against you? How do you manage reputation and risks in these times of hyper social media intervention? Maybe I'll open it up to any panelists who'd like to take this question.
To start with, look, I think that the most important points are speed and clarity of response. I mean, social media is a 24-hour phenomenon, and when campaigns take place, they can very quickly spiral out of control, if that's the right word. My view is that just like we said, reputation is investment. Having an investment in social media and having a presence that allows you to respond is really effective. So I think you can't ignore it any longer. And secondly, you have to deal with the situation and confront things head on. And I think not be embarrassed to put your case forward, or to apologize if you need to apologize, or to clarify what you need to clarify. I think the best thing is really to engage. Obviously, there's situations where that may not be the right course, but I think in general principle, engagement is probably better than non-engagement. But the most important thing is vigilance, really, and really being clear and rapid in the way that you get back to people, because I think most companies do have a point of view on issues, and it's perfectly valid for them to put that case forward.
Sure. Anyone else would like to come in on that point of managing social media and especially reputation and risk these times?
I'll add something to what Mark just said. I agree with everything. The other dimension is being prepared and building relationships, building partnerships, particularly with stakeholders that may not be those that one would normally engage with, who in times of difficulty are going to step up and speak to the values of the organization or the company, or the qualities of the leader who finds themselves in the spotlight. If that investment in building those relationships is there, if you're not always having to fight your own corner in a defensive way, then I think it puts the organization and the individuals in a much stronger place. So that's not specifically about social media. That's just about preparing the ground intelligently and building networks and relationships that you can draw on in those difficult moments.
Sure, indeed, these times have taught us the value of investing in those relationships and how critical those become. Let me pivot slightly to another risk that has really been a risk that corporates have had to manage more often in these times, and that's the regulatory risk. We live in these times when there is an increased trust deficit between companies as well as governments, policymakers, society, and corporates. There's trust deficit all around. How do you really navigate these times where regulatory risks have gone up on one hand, because we are seeing knee-jerk reactions from governments and policymakers to deal with what's really happening around us, and at the same time there is increased need for corporates to engage with governments and to keep those relationships going? How do you think, what's your advice really in these times on managing those regulatory risks?
Maybe I might
Yes.
comment on this one. It's more in our domain, as we are sort of the risk guardians for something like 30,000 corporates. And I'll make one comment, which is, I mean, it is complicated out there, right? And it's probably going to get more so. And this is, maybe it's COVID driven, but there's a lot more economic nationalism around. There's, of course, some quite significant deficits to be plugged, so sanctions are one way to do that. And so, the rule books, I mean, we work in countries which France, for example, has a 3,000-page Code du Travail for how to employ people, 170 pages of that, how to dismiss somebody if you wish to. That's complicated, right? And you look around the world in our complexity rankings around fiscal, employment, compliance, legal rules. The world is a complicated place. And as you pointed out in your question, the sanctions are punitive. There's both a heavy cost to carry to be compliant, some very significant monetary sanctions, and indeed some fairly significant extraordinary sanctions, including imprisonment. In about 4 or 5 countries, corporate fraud carries a death penalty. So, these are pretty serious concerns for our clients and ourselves as we manage those risks. So one thing is, on the ground, just really be close to what the rules are and how they're changing. A lot of our clients are multinational, so they don't just have to deal with complexity, they have distinct complexity in each country. India is quite a different place to operate to anywhere else in Asia, for example. And even with its reform program, that might simplify things, but of course also it changes things. So you just have to really stay close to the rules, have people on the ground that know what those rules are, and pay attention to it. And I encourage our clients to make sure that at the highest level, those costs are understood, because often clients come from relatively simple places to do business, may not be familiar with the complexity they're getting into. And unfortunately, there is a correlation between attractiveness and complexity. The most attractive markets in the world to invest in, the BRICS, for example, and India is in there as well, are amongst the most complex on our own complexity index. So great to invest in all sorts of ways, but you've got to know what you're doing, and there's no way around it but detail and precision in following the book.
All right, interesting you mentioned that, but you also talked about risks like increased protectionism, increased economic nationalism, and governments increasingly looking inwards. What's your advice at this point to corporates? Is it a wait and watch kind of, to your clients, is it a wait and watch kind of thing, Mark Weil, or would you rather say this is the moment to pivot, to reset your business, to realign your business to the new normal, or do you think this is a phase that would go away?
I think it's a phase. Our clients have no choice. They're multinationals. I'm a believer. This is not a fashionable thing to say these days, but I believe in globalization economically. I think it's lifted an awful lot of people out of poverty. I think it's a good thing. And I hope and believe that national level competition will force governments to behave and to find ways to make themselves easy to do businesses. And I can say, I know the government of India looks at the World Bank's ease of doing business rating, takes it very seriously, and is striving to make India easier to do business in. That's good for foreign direct investment. It's also good for local capital formation for entrepreneurs building great businesses in India. And I will say, in a time of COVID, it's easy to, there are lots of league tables about how different countries are coping with the pandemic. But fundamentals will out. You look at Iceland, which in 2009-10 was the pariah country. It got hit very hard. It defaulted. It was seen as the bad boy of the world's economies in its handling of the financial crisis. It's now, GDP is like 56 billion. It's tripled since the low point of 2010. Economic wealth, $55,000 per head. It's back. It's got on with it. So I do think fundamentals in the long run are what really matter. And governments making their countries easy places to start, to build, to invest is going to be critical. India has a fantastic talent pool, economy. It just needs to make sure that the ways of doing business there, the infrastructure, really support its own growth, both homegrown talent and inward investment into India.
Right, clearly not for corporates. Everyone has their own priorities, and everyone is trying to do things to work for their own agenda. We're getting in a few audience questions, and I'm going to just start, reading out a few of those. The first one that I have here is, why was the corporate world not really prepared for the pandemic? Is it going to be business as usual after the pandemic? And will quarterly results always remain more important? Anyone who'd like to take that?
I might say a word about the preparedness. I'm sorry, carrying on again, but I'll just point out all the businesses on this call, by definition, are still in business. If I had said to my head of operations in January, you're going to get like the best part of 10,000 people working remotely in 3 months' time, he'd have probably resigned, right? It would have seemed a crazy request, but we did it. We had no choice. So we did have a business continuity plan. I'm sure the other people on this call did too. We triggered it way back in January. I will point out, well before any governments outside of China seemed to be acting upon it, and did get ourselves safe. We also, I'll note, recognize that getting personal protective equipment to our people was both complicated and risk depriving medical staff of it. So we decided early on that remote working was the solution. So I kind of think a lot of businesses that I speak to feel pretty good about the speed with which they responded. It was a survival question, had no choice, and have managed to pivot to it. So I might just defend the corporate world a little bit there. There's obviously, if you're in the hospitality, the transportation, there are certain sectors where there's very little you can do. You can batten down the hatches, you try and harness cash to yourself, but there's a limit.
Maybe ask Shobana to comment on this one as well, in terms of the healthcare sector having been prepared to deal with something like this. I mean, this has completely taken the healthcare industry by shock. I think nobody could have been prepared for this level of a pandemic. Shobana?
Shweta, about the level of preparedness, I think that at no time did we not have beds in India. At no time did we not have ventilators or PPEs. So I think that, we should give ourselves some little more credit. And we were the first, remdesivir. In India, people get it as soon as they're, in the early stages. They don't wait like when you go into hospitals across the world, that it's so difficult to get. So I think whether it's medicines, whether it's consumables, whether it's the ventilators. So a lot of our things worked, and we just put it all together. It also helped that a lot of our of the Indians were asymptomatic. So, the way that COVID has spread in India, we could have done a bit better in testing. So preparedness, there's nothing that can prepare you for the intensity of what came. But I would like to tell you that one of the things that all of us have learned in corporate India, and actually even if you're an individual, it's how to manage, the thing of debt. The companies that will withstand this are people who really are not in such a bad debt situation. And I think that many of us, as you can see, that there were a lot of corporate groups that really went under during this time because they had not managed. So really, I think level of preparedness would also come in terms of how you look after the finances of your company, even in future. So I think that a lot of us have become a lot more risk averse, that we're really trying to see across into the future. And I'm just going to stop there because I'm sure there are lots of great points. But this is something that we've learned.
Right, I know tremendous lessons there, and being risk averse. It's interesting you say that you become more risk averse. But I'll probably invite Brad and Mark Reed to take the second part of that audience question, which is that when it's back to business as usual and the pandemic is behind us, will it be the focus on just quarterly results and revenues and shareholder management become important, and is it going to be really business as usual?
Yeah, I think, Shweta, look, sadly, I think the emphasis on quarterly results is not going to go away unless we stop reporting them. So that's clearly going to continue to be top of people's minds. I do think at the same time that shareholders are increasingly paying attention to, a company's ESG agenda. Is it something that just sits in the corporate affairs department, or is it something that actually really influences companies and influences their actions? I think that shareholders have realised that at times of great change, how companies behave comes under great scrutiny. And actually, at times of great change, consumer loyalty and behaviour is up for grabs. And so I think those companies that have done the right thing and communicated what they're doing will come out of the pandemic in a stronger position. And I'm sure as a result, shareholders will pay even more attention to the ESG agenda. I mean, it's interesting, in the UK, a number of shareholders said at the beginning of the pandemic that they did not expect companies to slash their workforce to maintain their margins in the pandemic. They expected them to take a much more balanced response, and I think that helped chief executives to do the right thing. I think of the FTSE 100 CEOs, and myself included, 36 of them took pay cuts for some period of time during the pandemic, because I think it was important that all of us played our own role in helping the company and helping people get through this. So I do think that actually, in the main, the corporate sector has sort of had a good pandemic, in inverted commas, if there's such a thing, and really has gone above and beyond and played a role. And if there's one area I'd like to see an improvement, it's the relationship between government and corporates, because I think that to some extent has broken down. I think governments probably around the world could have relied more on the corporate sector, and I think that it's been hard for the corporate sector to, in some cases, to get access to government to really understand what role they can do and what role they play. And if you think back to previous crises and wars and economic mobilization, I do think that the lack of testing in many parts of the world is still an issue, and perhaps the corporate sector could have done more in that area. So there are many lessons.
No, interesting you mentioned that, because it is a trend that we've seen across the globe, and I think you're mentioning this as a global trend as well, that while governments needed all the help and all the private sector partnership, and we keep talking about public-private partnership, and this is the time that we needed for this to play out in the best possible manner. But we did see that fail at many levels, and we saw corporates working in silos, doing their bit, but it was not the kind of coordinated action that you could have expected during times like these, and that clearly is a lesson learned. So thanks, Mark, for highlighting that. As well, come in, and this is around adoption. An audience asking, how do you suggest to fill the gap where adoption of technology has outpaced the understanding and awareness of it on the ground level, and what can be done by the government as well as the industry to fill that gap? Not really a very specific question around risks and reputation management, but in general around tech adoption. Would anybody like to take that? Brad, would you like to take it?
Yeah, sure.
I'm sorry, I didn't really hear I didn't really hear what you said. Say that again. I missed the question.
Sure. So it's a question around tech adoption. We're asking if we live in a world where adoption of technology has outpaced the understanding and awareness of it, and what can the government do as well as the industry do to fill that gap?
Look, I think we've seen technology, certainly big tech companies, step up in a huge way to help address some of the health challenges and the education challenges we've faced as people have become displaced and exposed as a function of this pandemic. But at the same time, there is a real intolerance at the moment between government and big tech. The gap has never been larger. And if we just take the DOJ decision as it relates to Google and what we expect to see from competition regulators from around the world, the issue of how much tax is paid, where it's paid, all of those kinds of issues, we're at a place where government and public sector struggles to understand and fully appreciate technology as defined by big tech and those that are leading from Silicon Valley. I think if we don't get the partnership between government and business to invest in connectivity, to bring the broadband speeds that are required in rural areas as well as in urban areas across many, many countries across the world, the wealth disparities that we've seen emerge this year, as you spoke about, Shweta, yourself earlier, are only going to get greater and greater. So this task for an enlightened, connected approach between business and government to deal with tech adoption and create the infrastructure for that is essential. It's actually people like, Mukesh Ambani, who's playing a big part from an Indian perspective in grappling with this issue, and the level of interest that's been gained from Western investors and what's going on in India actually is a template for many places. So look, I think it's a colossal challenge, but we've never seen government and the tech pioneers further apart than they are right now.
Thank you, Brad, for taking that. And I would have actually loved to invite closing comments from all of our panelists, but I believe we just have 2 minutes to wrap it up before I hand it over for closing comments. But I think it's been a very, very interesting and intense discussion around how do we manage risks and repetition in these times. And as we really sit down to rewriting the corporate repetition rule book 2020 and taking it to post-COVID times and taking it to this time when we've now used the term new normal in almost a cliche way, there are some clear lessons that seem to be emerging and some key takeaways from our panelists. And some of those include, of course, that you need to probably redefine corporate purpose, corporate value. And those leaders and those corporations that always understood the importance of empathy and trust and building relationships and having and managing those relationships beyond mere shareholder management are the ones that have emerged as real winners in this crisis. But going forward as well, there is need for companies, for leaders to really take the path forward where they will understand that this is the time when you need to do overall stakeholder management, where expectations have gone up, where you simply cannot afford to slip up or let your guard down, because this is a time when you need to manage your reputation even better, where you need to mitigate your risks even more, because there is heightened expectation all around. And lastly, the most important takeaway really is that I think corporates and governments need to really bridge that trust deficit. They need to learn to work better. They need to learn to work in a manner in which regulatory risks are reduced, and at the same time, there's better engagement for lead to overall repetition management as well as crisis and mitigation. So thank you to all the panelists for all your wonderful insights and wonderful comments. I think I'm going to hand over back to PAFI for their closing remarks now.
Thank you, Shweta. Thank you, our panelists, Shobana, Mark Reed, Brad, Mark Weil, for your great actionable insights and words of wisdom. I was taking down notes of some great takeaways, and some things just stood out. Like there was a statement, go revisit the purpose. Now, how simple and how profound can this be? The crisis gives you an opportunity to stand out. It puts you onto the fastest learning curve. Now, these are like mantras for practitioners of risk management to imbibe. Leaders need to be more forthcoming, more empathetic, increased emphasis on ESG. Now, all this has been an amazing session, and I believe this would be a true masterclass in reputation and risk management. During my long career in corporate affairs, I have had many issues which needed to be managed, but I am today truly envious of the young professionals entering the domain of the risk management. If they are able to traverse through the current pandemic, able to learn from it, are able to deliver well on it, for them this baptism by corona will raise their capabilities in crisis management manifold and would actually create many superb crisis managers in the country. I also thank Shweta for an excellent moderation of the session. Shweta, whenever PAFI runs the next issue management training class, I would love to run this video as a learning tool for people. On behalf of PAFI, all the delegates here and those on various live casts, I thank our panelists deeply for their time and thoughts. Please stay logged in. Our next session will commence in a few moments. Thank you very much. Stay